Good afternoon, everyone, and welcome to Stock Market Today for Friday, July 11th. It's Alissa Coram here, and a week where we saw the major indexes pausing near highs, and this comes amid more tariff headlines and just ahead of a new earnings season. Joining me now to discuss this week's market action and we'll prepare for the week ahead is my colleague Justin Nielsen. Justin, what do you have for us today?
Yeah, we'll talk about a lot of stuff in terms of market action. And then, of course, a few stocks that we're looking kind of interesting. That'll include Constellation Energy. Also, we'll look at silver, so Pan American Silver. And then finally, Planet Fitness.
And as you mentioned, we'll be taking a deeper dive towards the end of the show, talking about this market in relation to historical precedents because it is Friday. So we love rolling up our sleeves and digging a little deeper into the action. So looking
And of
forward to
course,
that.
the sector ETFs, as we do every
Yes.
Friday.
Yes, so we'll take a look at those too. But first, let's take a closer look at our major indexes and the action on the day and for the week. So first with the NASDAQ finishing down 0.2% Friday. Meanwhile, the S&P 500 down 0.3% on Friday, also off of the intraday lows. The Dow down 0.6% on the day, and the Russell 2000 was the hardest hit today, down about 1.3%, but it's still holding above 2,200 and that 200-day line. But overall, Justin, when you're looking at the NASDAQ and the S&P, we barely budged for the week, closed off lows, and we're sitting pretty near highs.
Yeah, you really couldn't ask for much more. When we cross that new high territory, and especially for the NASDAQ composite, the 20,000 level, the test really is, can you stay up there? And so far, so good. So yeah, if you had, these last 2 weeks were pretty strong, and the fact that you're just kind of holding right there, digesting the gains, that's a pretty good showing for the indexes. Now, look, a lot of times there can be some back and forth at prior resistance. Just because you get up there doesn't mean you stay up there. But that's what we're going to be watching for the next couple weeks.
Yeah. And I would say, especially given how the week started, right?
Yeah.
We were down almost 1% on the NASDAQ on Monday. So we battled back, closed just near highs. And now we're giving the moving averages a little bit of space to catch up to the action because on that 4th of July week, the NASDAQ closed 8.5% above the 50-day. We're still up there, but there's a big difference between 6.5% above the 50-day and 8.5%. What do you say, Justin?
Yeah. And one of the things when we do those studies of that extension above the 50-day moving average line, something that you have to keep in mind is that just because it's extended doesn't mean it can't get extendeder. So you have to just be aware of that it can go much further than you think. That's where it tends to start dropping off and correcting. But sometimes you get 9, 10, 11, even more extended above that 50-day moving average line, and you just continue going. So it's a guideline. What I tend to do is I look for reversals, and
Mhm.
that might let me know, okay, this could be something that's getting into trouble. But then I also have to put it in the context of where we're at in the market. We are still really kind of early in this rally, and especially when you come up from a V-shaped recovery, that can often lead to a more extended market early on, and so you have to put it in that context as well.
Right. And what I love about what we do is we have a top-down approach. We'll also take a look at, underneath the surface. So bottom up
Mhm.
and backwards and forwards. We look back in
Right.
time and see
We
how that
look
is
at it from every
every
direction.
angle, every direction. So we'll give more context as the show progresses. Let's take a look at the S&P 500 here briefly. Same story, Justin. A little bit of a rough start to the week, but even then closed off lows, and we are right near highs.
Yes, and to your point, again, you look at the weekly chart here, and it's kind of like nothing to see, just tight action, holding the gains. You've, got above that 6,000 level. That was a pretty important level for the S&P 500. You've stayed above there. You're above the 61.47.43 high, and you're staying above there. So, look, the indexes are showing a lot of strength. Now, we should mention that doesn't always translate to your portfolio. Sometimes, depending on your stock picks and how concentrated you are in certain areas, you might your results may vary from the
Mhm.
indexes unless you are very heavy in the indexes. And we see that with the IBIT 50 by Innovator. This is looking at some pretty wobbly action here. Now, overall, look, we've had a very strong recovery. Compared to the NASDAQ, this has been performing very well year to date and off of those lows, but it hasn't been nearly as steady. There's been a lot more back and forth. And sometimes you're seeing great action in the NASDAQ composite and the S&P 500, like this week. And we
Mhm.
were seeing some pretty terrible action in FFTY. And a lot of us were feeling that in our portfolios since we do tend to lean in growth.
Right. So taking a look at a weekly chart here for FFTY, down 3.6% on the week, while the NASDAQ composite down fractionally, just ever so slightly there. So I think, when you put that into context of where we've come from, that's a really great point, Justin. We've seen outperformance since those April lows. And before this week, only one down week. So growth investors have been overall treated well in this market rally, but the waters have gotten a little choppy
Yeah.
lately, it seems.
And you can just look at some of the individual sectors. I mean, of course, this week, what we saw was a big hit to the cybersecurity software firms. So if you look at CIBR or Bug or Hack, any of those, you can see how yesterday was a really hard hit there. And what was so interesting was that was putting a lot of pressure, the technology stocks, software in particular, putting a lot of pressure on the NASDAQ composite, whereas the S&P 500 to a lesser degree, but RSP was up yesterday. I mean, it looked like a breakout. And so then today, it was a little disappointing that it didn't follow through. But yesterday, it was very interesting as we were talking on IBD Live. We were noting that the advancers versus decliners were up, in favor of the advancers for both the NASDAQ and the NYSE exchanges. So sometimes you can get these big hits in your portfolio if you're concentrated in where the leadership has been. And this is where sometimes, as you develop the rally, sometimes you do have to be aware that sector rotation
Yep.
might happen. What started the rally might not necessarily finish the rally. And so you have to be prepared for that. But one day doesn't a trend make. So we have to be careful not to necessarily throw the baby out with the bathwater on some of these leaders. And this
Mhm.
is where a lot of our sell rules come in. You mentioned on IBD Live this morning how Webby's quick in the dead, quicksand and dead rule are useful for some stocks like Netflix. I do have a position in this still, but an early sell signal tells you, hey, when this is getting below the moving average lines on the relative strength line, that can be a warning sign. Not necessarily to sell everything, but to start trimming back.
Exactly, making incremental decisions. And I own Netflix as well. Wanted to bring this one up briefly as sort of an honorable mention stock this week because we have earnings next week. We have all the big banks, but then you're
Yes.
also going to get stocks like Netflix reporting, which last quarter, that was right around the beginning of this market rally in late April. So we could get some clues as to the market's health once we get more of these earnings reports rolling in this
Yeah,
coming
it
week.
was tough because April 22nd was when we had the follow through day, and of course that was right as earnings season was kicking into high gear. So now that we've had a rally, and look, arguably we could still pause a little bit here,
Mhm.
but we are going to have that earnings season. Sometimes the banks set the tone, but you do get a sense of how the earnings season is playing out because is it going to be one of those again where it's gold mines and landmines, things
Mhm.
really moving a lot? Sometimes they can be more forgiving of the earnings reports. Oh, okay, your guidance was off a little bit, but that's okay. I'm sure you're still fine. And other times the CFO coughs funny and the
Yeah.
stock goes down 20%. So we'll really kind of get a sense as the next couple weeks. I think
Mhm.
if I'm not mistaken, I think there's about 160 members of the S&P 500 that will be reporting, over the next two to 3 weeks. So we're going to get a lot in the
Yeah.
very early on here.
This is what we live for. This is part of the fun and games.
Right.
All right. So we talked a little bit about sectors. Let's officially go through our sector spider ETFs. Justin, please feel free to chime in. I'm just going to sort of quickly run through these. Speaking of the banks, earnings coming up, so we'll have to see. XLF, we did talk about a recent actionable area here. Relative strength waned a little bit this week, but still holding close to those highs. Then we move on to our healthcare sector, trying to find a bottom still, trying to move sideways within this sector. There are a couple of interesting names, so you can't just look at these high level sectors and totally disregard them, but it is really interesting to see some of those sector trends taking shape. And we know that this is a sector by and large that has lagged for a while.
Yeah. Probably also while we're talking about healthcare, it might be worth taking a look at like IBB, which we have seen a lot of biotechs come on strong. So yes, this has been an area that's been lagging, but the biotechs have recently shown some relative strength.
They sure have. Great note there. Materials, I believe this was one of the few sectors up on the week. XLB showing some relative strength since powering above that 200-day line. Then we also have XLC. This is communication services, a pullback underway here. You have your, I believe it's your Meta and your Google in this ETF.
Worth noting that Google is not looking too bad in terms of a setup. It hasn't, participated as much lately, but it's just skirting along that 200-day moving average line and looks ripe for a potential breakout. If there's some sector rotation to some of the fallen angels, this could be one to watch.
Yes, great note there. Here's XLK. The tech sector looks a lot like the NASDAQ composite in this steady Eddie uptrend here, Justin.
Thank you, NVIDIA. And I do have a position in NVIDIA, but of course, NVIDIA being crossing the 4 trillion mark this week, that one is helping XLK quite a bit because it's a very big component there. If you take a look at RSPT, which is the equal weighted technology, you can still see that it's not just NVIDIA. This is a technology led rally. This has been showing a lot of strength.
It sure is. Okay, next on our list, let's take a look at the consumer staples here briefly. Continuing to underperform, but honestly, we don't have a problem with that in a bull market. We're okay with that. Here's a look at XLI Industrials. You have your GE, your Boeing, even your Uber in here. I do own some Uber. And I think the aerospace defense area this week, Justin, especially today, we saw some standouts.
Yeah, ITA is a good way to kind of take a look at the aerospace defense area, but they're not all created equal. As you noted, certainly today with some of the news from the Secretary of Defense, Hegseth, that was really affecting your aero environment, your KTOS. So there were a lot of those that were doing very well because of the drone exposure.
Okay, utilities. Let's see here. Let's go to the weekly action here. A lot of tight action, and we saw a weekly gain of about 0.75%. We have a lot of those AI utility plays, and one of which we'll take a look at soon in the AI energy space coming up here shortly. Here's a look at XLRE. We're continuing to see a downtrend in that relative strength since the April bottom. XLY, consumer discretionary, roughly keeping pace with the S&P. You have your Amazon and your Tesla in here. And then we have the energy sector still trying to get above that 40-week line. And I would say somewhat volatile action in the energy sector as of late.
Yeah, it's been tough when you have all the stuff that was going on in the Middle East. And I mean, while some of it's resolved, you could easily see flare-ups happening there, and oil can definitely pay the price, as it were, for that. And look, XLE has been not really a great place to be looking. It's not only the volatility, but really below that 200-day moving average line and a poor relative strength. But you do have these areas of strength. FTI was one that I particularly noticed today. That this this just looks so different from everything
Yeah.
else. So this is the oil and gas machinery equipment, above all its moving average lines, the 21 above the 50 above the 200. So when you're looking at some of these groups, sometimes it's worth saying, seeing, hey, is there something that's actually acting very different?
Right. Okay, and then two other ETFs that we want to touch on before we move on. First, let's go to IBIT. Bitcoin, a big breakout this week. Full disclosure, I do own this as of that follow through day on April 22nd. And the weekly gain here, Justin, almost 8.1%. And shout out to our friend of the show and crypto bull, Jim Ropel. He and I on our monthly market report on Monday. This was one of the top trade ideas that we discussed, and it really picked up steam as the week went on.
Yeah, I do have a position in this myself, that I started at around 50. Sometimes I have to sell it when we're putting it on Swing
Yeah,
Trader. So there's been a little
in and out.
selling and then buying it back after the 30-minute restriction period is over. So I'm not sure what my true cost is now, but yeah, this was a nice setup, and it's been a little tough because some of these areas that have looked really good, it just didn't seem to be getting traction for a little while. But look, that's what happens sometimes when a stock or an ETF consolidates, and that really just looks like what was happening here. So you did have a chance to add to positions. I added to my position this week. I added actually a little bit more today. I started adding 2 days ago, and then added a little bit more today. So really strong look, for the Bitcoin.
And the action comes ahead of Crypto Week on Capitol Hill. So maybe we'll see some interesting headlines develop out of that. And then we also wanted to take a look at NLR tracking the uranium and nuclear space, Justin.
Yeah, so this kind of will tie into one of our first stocks, because Constellation Energy is the number one holding in NLR. But you've got a lot of stocks that are looking very interesting here, and some of them are a little bit tough to hold. They have these very high ATRs, and so this is a way to kind of participate in that. A lot of people are of the belief that nuclear is going to be a way for us to get our power, an easier way, because we have so many power demands, whether it's AI, whether it's EVs, electric vehicles, just upgrading infrastructure. There's a lot of reasons why we're going to need more power, and uranium, nuclear might be one of the reasons, or one of the ways to provide that. So NLR has already had a nice move off the bottom from April, and this consolidation, this pullback, was pretty ideal. It was very, very reasonable, and came right into that 21-day moving average line. Another member of this group is CCJ. I do have a position in CCJ, and I should also say I bought NLR today after we put it onto Swing Trader. But yeah, CCJ looks very similar. This is a miner of uranium. Support at the 21-day moving average line. And then you also have some of these that are a little bit more newer, right? Like your SMR,
Speculative, yeah.
and a little bit more speculative. So, names like these with the, small nuclear module reactor technology, you might be like, okay, do I really want to, take a flyer on this? Well, you get about a 3 to 4% exposure with the uranium, VanEck uranium and nuclear ETF in names like this, NNE, and so on.
Okay, well, you mentioned CEG, so let's go there in the alternative energy group, which is now ranked number 2 out of the 197 groups that we track. So in this AI power space, up 2.5% on Friday, had a couple of days of tight closes, moved above that range, Justin.
Yeah. So again, the fact that this has been skirting above that 21-day moving average line and just really didn't want to go below it. Even the hard hit about a week and a half ago, or it stopped right there at the 21-day moving average line. So that is a positive. And look, this is, of course, got that nuclear exposure. So this is a way to kind of participate in that with a company that's actually very well established. So you can go to the weekly or even the monthly chart, and this is something that's been around for a while. So it's not a flash in the pan. You've got a few years of data here, and you can see that, I mean, this has had quite a run already. So if there's opportunities for this to continue going, you can look at these tight areas as places to either add to your position or even start new positions. But you've got kind of almost like a overall cup with handle base here that you formed. So yeah, that's something that is a little attractive, and it's just kind of breaking a downtrend here of that handle. So something that did look interesting. So there's a lot of ways to play that space, whether you want to go straight for the uranium with something like a miner like CCJ, whether you want to go on the energy space, or the small nuclear reactors, or get a little bit of everything with the ETF.
Exactly. And I think the interesting thing here about Constellation is it can move a lot both
Yeah.
directions, right, Justin? But it's showing more orderly action as of late. And then on the fundamental side, something compelling is that Constellation has partnerships with both Microsoft and Meta, I believe. So mega cap tech partnerships for the AI energy rollout.
Yeah. And when your trillion-dollar companies are recognizing that they're going to need more power, you do want to look at those partnerships, because, there are those that are, going to definitely benefit from AI. And then there's what we call the picks and shovels plays. It doesn't really matter who wins in AI. That they're going to need power. That they're going to need some of these things. And so CEG definitely, fits the bill in that regard. And it's already gotten the stamp of approval from some big players.
Exactly. Well, we've talked a lot about gold in 2025, but maybe it's silver's turn. Justin, a lot of interesting action in the silver space this week, including from Pan American Silver on Friday. PAAS up 3.4%, broke out, then traded in a sideways range, and now clearing that sideways area.
Yeah, so I mean, it really just kind of skirted along. Again, a lot of stocks really consolidating very well at their 21-day moving average lines, and that's exactly what Pan American Silver did today. Now, SLV, which is the silver ETF, I think that was actually kind of buyable yesterday. It kind of broke out a little bit early and then stretched its gain today. So that's another way that you could just play the entire space, or you could go with the individual miner. And I should also give credit to Mish Schneider, who was on the podcast this week. She, of course, is the chief market strategist over at Market Gauge, and she was talking about silver. It's not just a shiny metal, right? It also has industrial uses. And yeah, there was a very compelling argument that she made. She looks at the ratio of how silver is doing in relation to gold, and yeah, she called us on Wednesday and got a nice move on it on Thursday.
Yeah, really great call there. Glad you guys covered that on the podcast. All right, so that's a look at PAAS and SLV in the silver space. And now let's go to Planet Fitness, up 2% on the day. It's been trending higher since bottoming in April. What about the recent action?
Yeah, so I mean, this is another one where there was a lot of kind of consternation among some of the software stocks. This one was doing very well, both yesterday and continue that today. When I mentioned how RSP, it was a little bit of a negative expectation breaker, how it had such a strong day, almost looked like a breakout, but it had no follow-up today. It went the other way. But Planet Fitness was not doing that. There were a number of stocks out there. I would say maybe Expedia was another one that was kind of on my list. That was on the short list of potentially getting talked about today. But Planet Fitness, look, you've got a lot of people that are look, just because the New Year's Eve, the New Year's Day is over, people still have their goals, right, for weight loss. And Mish Schneider also on the podcast was talking about maybe one of the follow-on buying opportunities to all of the diet and the Wegovy, the Novo Nordisk and the Eli Lilly and the weight loss things is people might end up wanting to go back to the gym. There might be the vanity play as people start looking a little bit better, want to buy new wardrobes, want to buy, into, their fitness, and all of the things that might follow on from that, makeup and everything else. So Planet Fitness, I've been watching this one because, again, this is one that just keeps on holding right there at the 21-day moving average line, really resilient and resisting any move
Mhm.
down, and coming right back to that 21-day moving average line. So this was an opportunity to potentially get into this, and I think this is still viable. It's a little bit stretched from that 103 breakout, but you've got a little shelf here, and you're breaking into that new high territory from 110. So you tried it a couple times, and this time we'll see if it lasts. But this time it definitely was a stronger close above that 110 area.
Mhm. All right, Justin. Well, let's circle back on the market action to add deeper perspective of where we're at in this uptrend.
So one of the things that we talk about on Market School is, in addition to the power trend, and just as a reminder, the power trend is really based on that 21-day moving average line being above the 50-day moving average line. And when you get that kind of situation, it's a time to really lean bullish. If you're kind of going back and forth, right? Then the 21-day and the 50-day, they might be trading places, and one's up and then the other's up. But when you get a strong trend, you typically see that 21-day stay above the 50-day moving average line, and you have your index low also stay above the 21-day moving average line for a while. Now, how long does that typically happen? Well, there are cases where it can go for quite a while, but I would say in the last 10 years, you really don't get too many cases where the low stays above the 21-day moving average line for 45, 50 days or more. And that's right around where we're at right now. So let's go through a couple of the other cases where this did happen. We can go to the summer of 2023. So just a couple years ago, we were at kind of a similar, situation where we had this nice, and you can go out maybe an extra month to see when it did break the 21-day moving average line. So you had this very long period of time, 45, 50 days where the low never undercut the 21-day moving average line. So it was really from 12,000 up to 14,000 and change that you were above that 21-day moving average line. You had a power trend. You had a lot of these factors that we have in our current market. And then look, just because you close below the 21-day moving average line doesn't mean that you were completely done. We can go forward a little bit. We had a lot of, perfect. Go to December. We had, once you cross that 21-day moving average line, there was this correction. You did spend some time below the 50-day moving average line, but you got support at the 200-day moving average line. And November 1st, remember that follow through day, we had another off to the races situation and a brand new rally. So look, that was over a number of months. The summer was just not great, and you probably wanted to sidestep a lot of that, but you did have another opportunity around the corner. So just be aware that these can happen where that break of the 21-day moving average line does lead to more selling, but sometimes there's a recovery almost immediately. And 2017 is a good example of that. If you go to around May of 2017, we'll focus on March in this case, because you had another one of these cases where you were trending above that 21-day moving average line in such a great way. You had this bad break below the 21-day moving average line, but then you held the 50-day moving average line. And by the way, 2017 was, I believe, the longest power trend that we've had in history. It did go under pressure a couple times, but it never, that 21-day moving average line didn't cross the 50-day moving average line for over a year. It was incredible how long the 21-day was trending above that 50-day moving average line. And look, it didn't go up that entire time. You did have these breaks, but they weren't full on
Mhm.
corrections. They weren't intermediate corrections. In fact, on the S&P 500, you never corrected more than 3.4% that entire move in 2017. So a very good example of situation where you did have the break of the 21-day moving average line, but it was kind of like no harm, no foul. So you don't
Right.
necessarily want to just sell everything. You want to wait in
Mhm.
the same way that when we do our buying, we have our checklist. Oh, you got the follow through day. Oh, you did this.
Mhm.
You got above the 21-day. You got above the 50-day. All of those things that got us into this market incrementally, you can
Right.
also get out incrementally a lot of times. So if you maybe do some selling on that bad break of the 21-day moving average line, and then you get support at the 50-day, well, you can start doing that buying right back. It's not like you went completely to cash and lost your positions. So something to keep in mind there. And then one more precedent that we can go over, if you go to 2010 and we can go to, let's say the end of 2010. Yeah, December, perfect. This was a very strong rally. September 1st was the follow through day. In this case, you had Netflix was one of the stocks coming out on that day from a beautiful double bottom. And, it had one final pullback and then really started going on September 1st.
Mhm.
Chipotle Mexican Grill, CMG, was another one that broke out on the follow through day on September 1st, coming out of this beautiful cup with handle. And going back to the NASDAQ, what did the NASDAQ do? We had a power trend very quickly after that September 1st, 2010 follow through day, and you had this
Mhm.
very nice trend. You did undercut that 21-day moving average line after having about 45 to 50 days of having the lows above the 21-day, but you immediately came right back. So I think it's, again, important to kind of recognize when you get to this level extension, yes, you might have some pullbacks, you might have some corrections, but that doesn't necessarily mean that the whole move is over. So be very diligent in thinking about how you would approach things. And
Mhm.
really, a lot of this will come down to your individual stocks. How are they acting? Do you have enough cushion? What type of trader are you? Are you a position trader or are you a swing trader? A swing trader, you're probably going to get knocked out of a lot of your positions in this kind of pullback, but you're going to have to do the buying right back
Mhm.
as you see it get back above the 21-day moving average line, back above the old highs and everything. So just plan this out ahead of time, because recognizing how long we've been extended is one part of the game, but what will you do depending on what the market does if that break of the 21-day happens and how it happens. Also, I think it's worth mentioning that Eric Kroll shared some of his research on IBIT Live this morning. So if you haven't gotten a subscription to IBIT Live yet, or given that a trial, this might be a good one to watch in that regard, because he gave a lot of good, kind of market history in terms of ATRs. And I know usually when Mike Webster's on, we talk a lot about ATRs. Well, he was using ATRs instead of the 21-day ATR, he was using the 50-day ATR, and how when you get to about 5.5 ATRs extended from your 50-day, you start kind of seeing more tops. Not always. You can
Mhm.
sometimes get more out of the market, but that is an area
Right.
where he has seen historically that
Short-term
tops often start
extensions
running
at a
into trouble.
minimum. Exactly. All right. Well, we know the 21-day line, a key tool for active traders. So, looking at those historical examples and seeing how traders should react when we get those moves in the market, I think is very helpful. So, what will happen here? When will we get that test or break of the 21-day line next? We'll have to see. But after that review, Justin, I know we'll be ready for it.
Absolutely. And so in the coming weeks, what are some of the things you can do? Well, as we saw a lot of these leaders really take some hits, and we saw some of these relative strength lines undercut on the weekly moving average lines. Now the question is, okay, Netflix, for instance, it crossed below its 21-day moving average line. What's the next stop? So start looking at, okay, well, the 50-day, or if you're looking at a weekly chart, the 10-week line. You also have earnings coming up. So if some of these start correcting and you get, you lose your cushion, that might change how you handle some of these
Right.
during earnings. You might just end up wanting to take some of the profits on some of these, and not have to deal with the earnings. Or you also could hedge. We've talked a lot about hedging
Mhm.
strategies using puts. You could, there's a number of ways in which you could hedge. You could get a little extra income by selling calls. That's something that David Ryan has been talking about, that he's been been doing in his portfolio. So a lot of ways to handle that. But be on the lookout for those relative strength lines. 1 week down below that isn't bad, but if you start seeing more weeks down and then you start undercutting the next relative strength moving average line, it's something that you have to be aware of. But don't give up hope, because there could be sector rotation. So look for those next stocks, have your watch list fresh and ready, be looking for things. They might not have the relative strength now, but if you start seeing that they're holding up better over the next couple weeks, that could be your early indicator that maybe these are going to be the next leaders if there is a sector rotation.
Great thoughts, Justin. Really appreciate all of the added context this week and how we should handle the coming weeks as earnings season ramps up. And I think with all of the headlines out there, from the tariff related headlines to other geopolitical headlines that we've seen, and then some, it really all comes back for us to those charts. What is the
Absolutely.
market's interpretation of those headlines? We use that as our guide, and that in combination with how individual stocks are acting, which I love how you hammered that point home, and also looking at those historical examples as sort of our roadmap for how to handle the current market, I think is the way to go.
Couldn't agree more.
All right. Well, thanks again, Justin. We appreciate it.
Thank you.
And thanks everyone for tuning in. That is it from us for this week, but we will be back Monday morning on IBD Live, investors.com/IBD Live for all the details on our daily morning live stream starting 10 minutes before the opening bell. And as Justin mentioned, most Fridays we have a special guest. So in addition to the live streams, you can check out recent recordings. Today, Eric Kroll, co-author of The Life Cycle Trade, walked through his research studying historical market rallies and was able to give us his take on where we're at in the uptrend. So check that out if you haven't already. And we'll see you Monday morning on IBD Live and right back here on Monday after the close. Have a great weekend.